Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
PC Jewellers is the company that we're going to focus on right now. It posted earnings which appear way below what the street was estimating. Revenues have declined, led by weaker exports. The operational performance, though, remains just about okay. Profit growth is lower because of higher finance costs. Sanjeev Bhatia, the CFO of PC Jewellers, joins us on the phone line to talk about that. Sanjeev, hi, good morning. I want to start off by talking about the finance, the interest costs that have surged quite a bit. Interest costs are now almost 40% of your EBITDA. And on the conference call, you said that you're planning to reduce your debt. How do you plan to do that, considering that you've just announced a big buyback?
Yeah, if I talk about the finance cost, so basically, as your operations grow, the finance cost would obviously grow, but as a percentage of our overall operations, the finance cost has actually come down this year. It has not gone up. Okay. So this is my point number one. And point number two is that till date, the company was using its own cash to grow its stores and expand. But now we are emphasizing more on franchisee stores, and therefore the cash which we have will be used to reduce our working capital debt and other liabilities. And obviously this would also result in reduction of reduction of finance cost.
So how much will the debt and the finance cost go down by, say, over the next 1 year?
Yes, surely.
No, by how much?
We have tried to give some figures in our presentation, but we seriously think that it would be a substantial amount, though it is not possible because just beginning of the year and we have started the reduction already. So I think the position would be much more clear by when we declare our Q2 results. Then we'll get to know the trend exactly.
Okay. Mr. Bhatia, even the revenue would be a matter of worry if you looked only at Q4. Of course, overall for the full year, the revenue is at 13%. But what can you guide in terms of revenue and margins for FY19?
So one, I would like to clarify, if you look at our full year revenue, I'll start from our full year revenues. So there is an increase
of 13%.
17%, ma'am.
Okay.
Yeah, there's an increase of 17%, and within that also, if we look specifically at our domestic revenue, that has grown by more than 27%.
But exports were very weak.
Exports were weak, and we were saying right since the beginning and quite early before the year end that our exports are expected to remain more or less flattish this year, and that's what has actually happened. And because the UAE imposed import duty of 5% last year, and in this January 18, they imposed another 5% VAT also.
Okay.
So this disrupted in the last quarter. Obviously, this acted as a dampener.
So what is the expectation in FY19? You said exports will be flattish. What about the domestic side and overall as well? What are you looking at?
We are not giving any guidance for the future prospects at this point of time. We are just waiting for this quarter to be over. Then we'll get to know the trends. There are some news that the VAT may be rolled back. So we still have to wait for the exact policy matters to clarify.
Okay.
And then we'll be in a position to give the guidance.
Okay. Well, I will have to tell you, Mr. Bhatia, and you know that better than me, that the market is really looking more for guidance in terms of the sale of shares. If you can clarify whether there will still be these off-market gifts to family members. There is a suspicion that family members are possibly selling those shares in the open market. How would you reassure investors? Because the stock has destroyed a lot of wealth.
You are very right. And frankly, this was the first point in our con call on Friday.
Yes.
We clarified this point. And I would like to repeat to your listeners at this point of time that CPJ is a 13-year-old company. Till date, promoters have not sold or pledged or gifted anything, not even a single share till date. This was the first transaction done in 13 years of time by a promoter, elderly promoter. It was a personal decision, and the market has taken it otherwise because perhaps it was the first time. In the call, we promoters have already expressed regret for the same, But at the same time, if I talk from the company's viewpoint, it has not changed the management control. It has not changed the strategy of thinking for the company. So it was a one-off transaction. This has happened.
Okay.
Promoters have expressed regret, and they have committed that this is not expected to happen again.
Okay.
Yes.
Just one more question, sir. Why is it that exports are flat and even overall revenues at 17%? You know, Titan guided extremely aggressively and even turned in a 20-25% revenue growth. They were not complaining about exports. What's going wrong?
No, there's nothing going wrong. But the type of jewelry which we manufacture and which we cater to, majority of that jewelry is sold within the local markets of UAE and Gulf, and it is not only us. It has been coming in regularly in the newspapers and in other publications also that India's jewelry exports have really suffered in this quarter because of the imposition of such a high amount of VAT.
VAT.
And